Hello and good afternoon. Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Well, Yatin, while we saw the sustenance of the gains throughout the day, but the last 30 minutes proved to be the test of the bulls. And eventually we did see profit booking emerge. And Sensex shaved over 400 points to settle flat in the green, while Nifty also failed to hold that 24,800 mark as well. But yes, the weakness did emerge in the IT and pharma pockets, and that's where the pain was felt in the markets as well. However, if you look at the India VIX, that continues to remain at quite comfortable levels, indicating that there could be no sign of immediate panic in the markets. And sectorally, Nifty Auto Index, that was a clear winner of the day on the back of the GST rationalization exercise. And Metal Index also did quite well on the back of multiple triggers of potential rate cuts and good data coming in from the China. We'll discuss that in a bit as well. Broader markets also did well. However, mid caps outperformed out of the two from the markets. But yes, Yatin, last 30 minutes of selling, but still we are going home in green.
Absolutely, and we are going green. But as you mentioned, Lovisha, in the last half an hour, 30 minutes, we had a 100 points decline on the Nifty from the day's high. And probably, every day in the last 30-40 minutes of trade, we see a sudden jerk coming in the markets, which pulls the overall benchmark indices lower. Nifty 100 points, Sensex 400 points. However, the good part about today's trading session was that the mid-cap stocks were holding up. Despite the market fall, the mid and small cap index were up half a percent each. And we had almost a 400 points gain for the mid-cap index. Advance decline ratio, hence, was almost in the ratio of 1:1.
That's right. But yes, let's take a look at some of the top gainers and losers on the Nifty. Like I was talking about, the price cuts drove the auto stocks in the fast lane, and that's why you can see majority of the auto stocks dominating the Nifty 50 gainers list. So the be the likes of Tata Motors, Eicher Motors, Maruti, Hero Motocorp, all of them seeing a gain of up to like 2 to 3% in today's trading session. On the other hand, metal stocks also did well on the back of Morgan Stanley's report as well, where they have turned constructive on the sector, and they've upgraded a couple of counters as well. We'll discuss that later in the bit. But yes, JSW Steel on the back of that with about nearly 3% gains coming in. Tata Steel also doing well with about 1.7% gains. However, if you look at the losing end, what did not do well in today's market, that includes the likes of SBI Life, TCS, Apollo Hospitals, Nestle. All of these were some of the top gainer losers on the Nifty 50. Coal India also seeing a cut of about 1% as well. And Dr. Reddy's, like I was talking, like majority of the pharma pockets and of course the IT pockets also saw a little bit of a selling pressure in the last 30 minutes. And that's why you can see some of these names dominating in the Nifty 50 losers list. But yes, mid cap and small caps, a mixed trading session coming in from there. Both of them started well in today's trading session, but however, did see some minor cuts eventually in today's trade. Nifty mid-cap with about 0.5% gains and small-cap also with about flat to positive bias. Yatin, what are we gathering from the broader end of the markets? Any movers and shakers there?
Yeah, so if you look at the markets on the mid-cap side, we had stocks like GMTC, and post the annual report release, the stock has seen a steady move up. 5% up today and another 10% last week. The company is talking about expanding aggressively in the rare earth mineral space, because of which the stock has seen good momentum. Bharat Forge, Ashok Leyland, basically the commercial vehicle plays, both were up 5% each. What was not doing well is Amber Enterprises, and after stake sale in its subsidiary, we had the stock which corrected 4% today, almost the top loser in the F&O markets today, along with Trend, which was down 4%. Coromandel and Godfrey Phillips also witnessing some sell-off. But if you look at stocks like, the auto pack, especially Eicher Motors, Ashok Leyland, TVS Motors, all of them have hit a fresh 52-week high, in fact, some life high in some cases. Also stocks like L&T Finance, Uno Minda, Tata Steel post the upgrade by CLSA, and Eternal continue to hit fresh 52-week highs.
All right. Like you were talking about Eternal, let's also quickly dive into this some of the top stocks in focus. We'll first touch base on Swiggy. Well, the stock did move in today's trading session, eventually ended the day with nearly a percent gains after Nomura initiated a buy coverage on the counter. And they've shared a target price of about 550 rupees, which implies about 20% plus upside potential for the counter. That's what they're watching out for. Now, what made Nomura bullish on the counter was that they believe that the company's food delivery business is now on a steady profitability trajectory and is expected to remain a key cash generator. And they also believe that the company's quick commerce vertical still holds a challenger position, and profitability in this segment is also likely to improve from here on. They also said that the company is well funded and to scale its quick commerce business further, and therefore the risk of equity dilution remains low for Swiggy at this point of time. But apart from Swiggy, they have also reiterated a buy call on its peer, which is your Eternal, and raised the target price to about 370 rupees from 300 earlier as well. They also believe that Eternal's food delivery will continue on a steady path, and quick commerce business is also seeing some contributing margins which would bottom out soon as well. If you look at both of these counters, we did see both the companies raise their platform fees ahead of their festive season. Swiggy increased it to about 15 rupees including GST, while Zomato also raised it about to 12 rupees as well. But now these platform fees are an extra source of income for both of these food delivery businesses. However, media reports have been suggesting that the fresh GST reforms could trigger changes in the fee structure as well. So, Yatin, Morgan Stanley earlier in their report, they had estimated that an average 2 rupees extra could increase in terms of platform fees for both of these counters on the back of the GST reforms ahead of the festive season. Can see some burn in the pockets of the consumers, but average 2 rupees is still like, relatively better than higher.
Yeah. Particularly, Lovisha, talking about the quick commerce companies, recently they have increased the fixed charges or the convenience fee from levels of almost 8 to 10 rupees per transaction to almost 15 in some cases. Obviously, it depends on the PIN code. But yes, we have seen a steady increase in income and the quick commerce business for both Swiggy as well as for Zomato.
That's right. All right, let's quickly move on to the next stock in focus right now. That was your Samvardhanva Motherson. Of course, the entire auto and auto ancillaries pack has been buzzing on the back of the GST news. And now the stock of this auto ancillary also saw good moves today. Given that the company has also outlined its revenue growth target over the next 5 years, they've outlined about 4 times of revenue growth over the next 5 years as well. In addition to that, the company also plans to double its ROCE to about 40% by the end of the current year from 18% that it had reported in the previous financial year as well. Apart from that, they've also remained confident that more than 75% of their incremental revenue that will come from is from new acquisitions that the company has made in the recent past as well. And they've also said that more entities of the group will be listed, and once they become more self-sustainable as well. So the company earlier has also clarified that 50% tariffs was imposed by the Trump administration, so that would not have a material impact on the business as well. And they've also mentioned that they won't rely on one particular country for more than 10% of their revenue, so that any of the tariff increases like earlier, like US has been facing, they can offset such kind of impact going ahead in the near future as well. Now, brokerages were quite enthused after their investor meet, because we did see JP Morgan, they maintained their overweight rating on the counter, and they've given out a price target of about 105. And Jefferies also gave out a buy rating on the counter and a price target of about 110 as well. Now, the brokerage firm liked the company's strong manufacturing capabilities and its expanding addressable market share, and its ambitious growth target is what made all of these brokerages quite enthused about the stock as well. But Yatin, earlier in FY20, Samvardhanva Motherson had rolled out some ambitious targets as well. But if you look at the present FY25, they were not able to meet it. And right now also they have rolled out quite a bit of an ambitious targets. One has to wonder whether or not this can be met.
Yes, the question always remains, but the company is confident that the non-automotive business as well as the M&A activity will drive, the overall return on capital employed as well as the business for the company. Yes, it has been a M&A war machine, a lot of acquisitions that they have done over the past several years, they have successfully transformed them. But yes, sometimes, we have the Brexit issue, then talks about the trade war, then, there is some geopolitical issue because of which they sometimes are not able to manage the overall guidance. But yes, in terms of growth, there is no doubt that they have done very well over the past several years and still maintain that they'll be able to achieve a 40% return on capital employed. Whether or not it does happen or not, time will tell. But yes, recently the trade war has clearly seen an impact on the company share price, which have been underperforming other auto ancillaries.
That's right. But let's also address some of the metal stocks in today's trading session. If you look at Nifty Metal, that was also one of the top sectoral performers of the day. Now, they were just not one, but multiple triggers what led to metal stocks shine in today's trading session. First, since we had a weaker than expected jobs report, so that boosted rate cut prospects, and currently futures are pricing in 87% chance of a 25 basis point rate cut by the US Federal Reserve when it meets next week itself. Second, the China's anti-involution drive, which is aimed at curbing excessive price competition, is also expected to support growth. And then we also had some positive manufacturing data that came in from China, which has also lifted your global metal demand expectations as well. Back home as well, if you look at India-China relationships has also been started to warm after PM's visit as well. So on the back of that also you can see plenty of optimism which came in for the metal counters. And also we have safeguard duty and steel imports which also helped revive the sentiment around the metal stocks as well. Now on the back of all of this, we also had a positive report from Morgan Stanley where they have shared a constructive stance on the sector and they expect steel spreads to expand, domestic demand to improve. And on the back of that, they have upgraded Tata Steel, JSW Steel to overweight ratings and placed SAIL and Jindal Steel to overweight calls as well. So, Yatin, metal index so far this year has already moved quite decently. And now we have more triggers for further rally, with the India-China relationship also improving. Majority of those metal counters did well in today's trading session.
Yes, the majority of metal stocks have done well. In fact, the China, talks about limiting production, limiting the overall capacity, something which has worked well, especially for the steel sector. And today, we have seen this metal index perform. Not only that, last week we saw a huge jump in metal stocks, clearly indicating that now probably prices will stabilize with China clearly controlling most of its capacities in order to revive not only the domestic market but also will help international prices stabilize.
But yes, auto stocks that did quite well today on the back of the several price cuts.
Yes.
Yatin, why don't you take us through that?
Yeah, so Lovisha, we have seen that one of the biggest beneficiary of the GST cut is the auto sector. Now, a lot of companies over the weekend announced price cuts. Be it Hyundai Motors, they have announced price cuts up to 2.5 lakh rupees. Obviously, it depends on the model and the variant that you buy. But yes, we have seen the overall picture in the auto sector quite better than what was earlier expected. Now, price reduction has been in the range of 6,500 thousand rupees in terms of motorcycles to almost 70,000 rupees minimum price cut for four-wheelers. Obviously, if you were to buy a Mercedes, probably the price cut would have been nearly 11 lakh rupees. So, across the board, be it luxury cars, SUVs, motorcycles, or probably car models, across the board there are discounts which are reigning. In fact, the price cuts will not be happening on 22nd of September. Earlier than that, a lot of auto companies have already started giving discounts. So if you look at Mahindra and Mahindra, the discounts run up to 1.5 lakh rupees. Hyundai, as I mentioned earlier, 2,40,000. Skoda, BMW, the discounts run up to 6 to 9 lakh rupees. And if you talk about Toyota and other companies like Tata Motors, there the price cut is between on a higher side to 3 lakh rupees to almost 1.5 lakh rupees in case of Tata Motors. So yes, the discounts are already started and a lot of bookings have already started. In fact, there was anticipation that September would be a washout month, but given the fact that now auto companies have already started discounting the prices, we could see a demand which can already be front loaded. Obviously, there is festive season, Navratri starting in September itself. That will clear up a lot of inventory which is there in the system. And then probably in Diwali also we could see a bout of buying. So yes, auto stocks particularly doing well. And as I mentioned in the opening comments, a lot of auto stocks are already at 52-week highs or all-time highs, clearly reflecting that the anticipation is that there could be a decent, volume growth because of the festive season as well as the GST cut.
That's right. Diwali has arrived early for us, and that is in the form of GST reforms. And, it's given a big boost for all the consumers that is looking to book their vehicles ahead of the Diwali and, of course, the festive season as well. But yes, that's all the stocks we have had so far. It's a positive start to the week, but we'll watch out, whether these gains sustain throughout the week as well, given that the last 30 minutes did not prove to be so. But yes, if financial freedom is something that is your goal, then Super Pro can be your superpower. You can get all the live trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one. And right now we have our special financial freedom offer. You can get the annual plan for just $24.99, down from $74.99. Download the Moneycontrol app and subscribe today itself. All right, with that, we've come to an end of this edition of Closing Bell. It's a wrap from Yatin and me. Thank you for watching, and we'll be back with markets tomorrow.